All right. Hello, everyone. We are live. Give us a few minutes. We go live on all the platforms. Oh, looks like we got some people in the chat already. I'll throw up the chat. Thanks, everyone, for tuning in early. It's just after 11 a.m. Eastern Time. It is February 16th, and our rates are now live, so we'll get started with the show here in just a minute. Good morning to everybody in the chat. Good morning. Give us a few minutes while we go live on all the platforms, and we will get started shortly. Thank you, everyone, for tuning in early. Good morning. Good morning. Just another couple seconds, and we should be good to go. Thank you, everyone, for tuning in early. All right. It appears we should be live on all platforms. Thank you, everyone, for tuning in. If you have any questions on our topics for today, you can drop them in the comments on whatever platform you're on. We're live on YouTube and LinkedIn and a few other places, so you can obviously comment. And if you have any questions, we can go over that during the show. But let me take off the chat for now. Thank you guys for joining us. And we will get started with the show today. Thank you, everyone, for joining us today. My name is Nick Hiersche. I'm the president of the Mortgage Calculator. We are a lender that specializes in non-QM and alternative income documentation financing, as well as our standard conventional FHA, USDA, and VA loans. And today we're going to go into a deep topic on our HELOC combo loans, which is a pretty interesting thing that we've been doing for quite a while, actually. Which we will have Jose Gonzalez, our sales manager with 27 years of experience, go through a live demo on the rates of a HELOC combo example. He will probably have a couple examples for us of kind of different ways we would utilize this loan, but essentially it would be where we have a first mortgage combined with a HELOC second mortgage. So a very cool option. And then before we sign off today, we'll have Kyle Hiersche, our COO, to go through how to get with our team and get a full detailed quote like Jose will present. But as we do every morning, we will start with the live rates. It is February 16th, just after 11 a.m. Eastern Time, and all of our standard programs have live rates now pushed, which we can check out. So let me switch to our live pricer, and we will check out some live rates for today. Give me 1 second. I'll switch my screens. And here we go. So this is our live pricing tool. Again, this is for our team of loan officers. So this is for mortgage professionals. It's just going to give us an indication of the pricing today for our basic programs and going to give us some general indications. And if you want a full loan estimate, please get with our team. We have over 300 loan officers licensed in 20 different states for primary and second homes. And we can do our DSCR investor loans in most states as well. So if you want a full breakdown of all the costs, please get with our team. This will be a simple pricing demo to show what the markets are doing today on February 16th. So for the demo today, we'll go through a few options. We're going to do our conforming conventional first. Then we'll go to our second best option. Typically for most primary borrowers are going to be our FHA options. And then we'll go through our expanded guidelines, aka non-QM. That's really where we specialize here at the Mortgage Calculator. And we have over 4,000 loan programs under our non-QM options that some lenders don't even have access to. So that's where we really love to provide some examples. And for today's example, we will not do VA. We appreciate our veterans. If you do qualify, we can quote that very quickly. Just let us know. But since not everybody qualifies, we won't do that on the live demo. And same with USDA. If you're looking in a USDA eligible area, the property must be in a rural area. So if you are looking there, please let us know. We'll quote that up very quickly as well. But for the live demo, let's start with our conforming conventional examples. For all of our demos today, we'll use 80 LTV, 80% loan, 20% down payment example. Oops. Click that slider too big. Give me 1 second. And our loan amount will be $400,000 for all these examples. Desired price, 99. That means we'll look for an example, our best rate combination with 1 discount point in cost. Most of our customers are asking for a slight buy down. So that is going to be our example target for today. And we're going to do purchase 30-year fixed, standard scenario, primary, single family, 1 unit, state of Florida, county Miami-Dade. That's where our office is based. And FICO score for all of our demos will be 760 FICO score and 40% estimated debt to income ratio for all our examples. So let's see what we have today for our live rates. And we have a few examples here. These always pop up first for Home Ready and Home Possible. Those are some specialty programs for borrowers under our area median income. So let's cruise down to the first standard conforming example that will work for anybody. A lot of Home Ready. Here we go. Standard Fannie Mae. Looks like the best option we have. Rates have gone up today. Again, a lot of market indicators have just hit. So it looks like our rates went up from yesterday's show. So that's why we love to do the show. 6.75 rate right now for 0.875 in discount points. Looks like the best combo the computer found. Again, get with our team if you'd like a full breakdown of all the different options. We can give all the different options for any of these programs we're going to go through. But typically, if a borrower does not qualify for a conventional or conforming program, typically the next option that we present to a borrower would be an FHA option. So let's go back to the pricer here, set everything back up the same, 80% loan, 20% down payment, but we'll switch to an FHA program and keep everything else the same, 760 FICO, 40 DTI, and let's check out our FHA rates to compare. Typically, the FHA is the next option because it allows us a little more leeway on the debt to income ratio and some other types of things. And FHA rates are quite a bit up from the earlier this week as well. So it looks like our best option we found here was, I want to pick this here. I would pick this one, the 6% rate for 0.625 in discount point cost. And remember, with FHA, there are additional monthly mortgage insurance and upfront mortgage insurance. So always check out the APR to compare apples to apples across any of these programs, especially FHA, where you might not realize there's some additional costs. Now, if a borrower does not qualify for full doc conforming or full doc FHA, that's where some lenders and banks may not have other options. But us here at the Mortgage Calculator, we really love to do our non-QM or expanded guideline options. So if a borrower doesn't quite qualify for what they're looking for, we can go into expanded guidelines, and we have over 4,000 different options for that borrower to still purchase that home that they're looking for. So we'll keep everything else the same, 80 loan to value. Everything else will be the same, primary, single family. But you'll see now that we have our alternative income, we have a new option, income. So now instead of full doc, which is what we use for FHA and conforming, we have all these different options for 1 year and 2 year alt doc, asset related, business bank statement, 12 and 24 usually most popular. For our investment properties, we have investor, DSCR, and no ratio. And our most popular program for non-QM are our personal bank statements for 12 months. And we're going to do that for our self-employed borrowers. So many times it's a self-employed borrower who doesn't quite qualify using full doc with their tax returns. So we're able to use 12 months of their personal bank statements to determine a debt to income ratio for that borrower using that alternative income documentation method. So this typically allows a borrower to qualify where they would not, or qualify for more purchase power, more home where they would not. So these are great solutions. So let's check out our non-QM options for bank statements. And you'll see here that they're pretty similar actually to conventional. Now that conventional, really reacts quickly to the markets. We'll see here our best alt doc option here is 7.75 rate. So the rates are a little higher for these specialty programs, but they're getting closer now. So 7.75 rate and 0.625 in discount point cost. So very comparable to conventional now to use alternative income documentation. So these are the programs that we love here at the Mortgage Calculator. And if you'll notice, there are dozens and dozens of programs that use bank statements. So please get with our team that can navigate through this, find the exact program that fits with you. And in particular, with these non-QM programs, we can have things like credit events, right? So we can have like a bankruptcy or a foreclosure things like that. So some of those higher rate options you saw might be because they do allow some sort of credit event or something else that would be negative and would kick them out of qualifying for an FHA or conventional loan. So we love these non-QM programs. Please get with our team. There are just so many hundreds of programs for every option, and we love to navigate through those. Now, before we pass it off to Jose for a detailed example on our topic for today, we always want to go into our investor options. So for investment properties, we're going to compare real quick our conforming conventional and our non-QM options. We do not have FHA, VA, or USDA options for investment properties, so it's very easy to quickly compare our couple options. So first, we'll go through our conforming conventional. Do the same example here, 80 LTV, 20% down payment for an investment property, and 30-year fixed. Everything else will stay the same as all of other examples that we did. 760 FICO, 40 DTI for this conventional loan. And let's check out the conventional investment rates this morning. So again, the conventional markets are reacting quickly to all of the data in the marketplaces, inflation data. So we've seen these rates are higher than they were earlier. So 7% rate for investment property for 3.25 in discount points. That's because Fannie Mae, Freddie Mac, the government-sponsored entities, they added an additional penalty basically for investment properties. And that's why we don't see any one discount point cost option. So a lot of times our investors are asking for options to compare so that they can save money in their pocket, right? So investors want to save discount points. If they could do an option with a higher rate but less discount points, a lot of investors want to save that money to do another purchase and make their money stretch further. So many times we'll present these options. We love to work with investors that do qualify for conforming conventional. You see there's a ton of options here, but even when we go, up in rate, there's really looks like right here is a good option for a little bit less discount points, 7.5 rate for 2.625 discount points, but you can't really get to a no discount point option because of those additional penalties. That's where we love to present our non-QM investor options. So we'll set this up again for the last example today on the live pricer. We'll do 80 LTV loan, switch it to investment property, switch it to expanded guidelines, aka non-QM, and now we have a couple new options that pop up. So now we can do our income verification. And for our investment properties, our most popular program is DSCR because it actually does not require any income verification. We don't need any employment information from the borrower or any income verification from the borrower. We're simply going to use the appraisal value for the estimated rents and determine if the estimated rents can cover the PITIA, the payment for the mortgage. And typically, if it covers, we have a ton of options for a DSCR over 1, which is where it covers the payment or greater. And we even have options for ratios under 1, where it doesn't quite cover the payment. So tons of options. Our investors love these, and we'll see why here in a second when we pull up the rates. The other option we can edit is our prepayment penalty for non-QM programs. For investment properties, we typically always have a prepayment penalty of 3 years is pretty standard. We can have a 0 prepayment if we wish. That will cost more. Or we can do a 5-year prepayment with some programs, and that will cost a little less. But for our demos, we'll always use 3 years here. And let's check out our investor DSCR programs this morning. So you see here, the rates a little bit higher than before, but these non-QM markets don't react as quickly. So we'll see these are very comparable when you have an investor looking at a 7.25 that we just looked at, conventional for 2.6 in discount points. Now we have an 8.625, so pretty comparable rate for 0.85 in discount points. So it saves our investors money in their pocket where they can go purchase more. And with these DSCR loans, we can do multiple loans, and a lot of our investors that own multiple properties will cash out multiple properties at the same time and purchase multiple properties at the same time. Since the DSCR doesn't require any personal income verification, it allows us to do multiple projects all at once, which is pretty amazing. So you see here we have dozens of DSCR options. Obviously, that was the best option here at the top. But a lot of these other programs here have different variations. Some of these may allow short-term rental income and other things. So we have a ton of options here. Ooh, looks like this option was overlooked. 8.25 rate for 0.6 in discount points. That's because this requires a higher ratio on the DSCR here. So little nugget we found here towards the bottom with actually a better rate and cost combo. So that would be the one I would want to find for my investor that does have a high cash flow here. So tons of options. Make sure you get with our team. They can find those little nuggets of good programs that will fit with your investment property purchase. So we love to do these DSCRs. But for today, let's get into our topic of today. So let me switch my screen again. Give me 1 second. And today we are going to talk about HELOC combo loans. So this is kind of an interesting combination of a first mortgage with a HELOC for a second mortgage, and allows our borrowers a lot of flexibility. I'm going to have Jose Gonzalez, our sales manager with 27 years experience as a realtor and a loan officer. So he has some unique perspective on how this helps on kind of both sides of the transaction and really opens up opportunities for our borrowers to, again, since we love to specialize in solutions, to offer a solution to get a borrower their dream home where it would not otherwise be possible, right? So these are great solutions for our borrowers that other loan officers or other lenders may not know about or may not know how to utilize. But Jose's done, multiple dozens of these himself and hundreds of these as a team, so he really knows how to structure these together for our borrowers that need that extra help. So let me go ahead and pass it over to you, Jose, and you can take it over.
All right. Good morning, everybody. Jose Gonzalez, sales manager here at Mortgage Calculator, licensed in September of 1995. Now, here we're going back to the beginning when we first started the Mortgage Calculator. Right before the pandemic, we were coming up with strategies on how we, at a bank, with the limited products that we had, could get creative. And we got very creative with the HELOC combo, using it for both purchases and high LTV refinance transactions, especially with a cash out component. Notice I say a cash out component because it is a structured transaction where part is rate and term and part is cash out. So there's many things that we can use this combo HELOC for, as purchases and refis. And during that time that we rolled out the product, everybody was really looking for money, so it really took off. So the first example that I have here, and I have 5 examples to show you on different ways that we can apply HELOC combos. You didn't know HELOCs were so so flexible to be able to use in so many scenarios. But here's our first example. This is the MI killer, right? You don't want mortgage insurance on your deals, and you want to also throw an extra little perk, because I guess I could call this also the jumbo killer, the MI and jumbo killer option, where we can actually finance up to 95% of what would normally be a jumbo transaction. So you say, how so? How can you do that? I thought, for example, here, our example is in Broward County, Florida, which for whatever reason, it's still not designated as a high cost county. So our conforming loan limit are $726,200. So I've structured this example as a $925,000 purchase, where normally, unless your borrower wanted to give a really big down payment, right, more than 5% for sure, they would not be able to do this deal with conforming loan underwriting, conforming loan to values, all the kind of good stuff that you would want from a conforming loan. So what we do in this scenario is we structure it as a combination loan with a first loan of $725,000. So I kept it $1,200 under the maximum limit. Oh, right. And that puts us actually at a 78. Let me go up here to the LTV portion. Yeah, 78% is our LTV. 78.38% is our LTV, which means no MI on the deal. And it also means then that our first loan of $725,000 would be any of the options that you see here, with the lowest cost option at a 7% rate and the lowest rate option buy down at 6% rate. I don't think you'd be able to do that on a jumbo, and certainly not at the high LTV combined that we're doing here of 95%. So even though it says $200,000 down payment there, that's just math. 725 subtracted from 925. However, we go down here to our HELOC portion, and we see here that we are able to get at a 95% combined loan to value, we can get a HELOC of $153,750 at a rate of 13.75%. And mind you, this is a HELOC, interest only, accelerate the payment, all that other kind of good stuff. And then your borrower would come in at a 95% LTV. Now, mind you, these HELOC options, we like to make sure when we do offer them that we provide the proper consultation to the borrower, because this is best geared for borrowers that are, move money around, maybe self-employed, or, just they have a good salary and they're going to be able to pursue an accelerated repayment plan, because that's the benefit of HELOCs, is you pay interest on what you owe. So if, for example, one of the strategies on the HELOCs is to make half of the payment every 2 weeks, right? So you're going to start, obviously the first payment you want to get ahead and pay the full payment, but after that you're going to make half a payment every 2 weeks, and you're going to make more payments throughout the year. You're going to pay it sooner, because on the HELOC that does make a difference. If you pay it sooner, they charge you less interest. So it's a very good strategy for your borrower that can afford it, that doesn't want to be bound by MI and maybe having to give 10% down. So this is very good option for the 95% LTV purchase. Then I'm going to show you another option, the same structure, but maybe they didn't want to take it all the way to the 95. They want a little bit lower rate on the HELOC, because that's what it boils down to. So in this scenario, we do the same on the loan, 725,000 on the first. That doesn't change. We're at 78.38% LTV. The only difference here now is our HELOC is only for 107,500. That's 90% CLTV. So 10% total down payment. Rates on the first remain the same, but where it gets a little bit better is down here, where you see that our rate on the HELOC now drops to 11, because it is only a 90% CLTV. So obviously less risk for them, less rate. So again, if they can come in with the 10% down, they save a little bit on the payment for sure on the second payment. First payment remains just as low. Now, here's another twist on the HELOC. This is the one that people really loved when we rolled it out, was, how now most people, if they have a low rate, this would probably, may or may not happen right now, but, let's say they're going to do a rate and term, right? Because on a cash out, you're limited to maybe 75, 80%, depending on the property type that you have. Assuming here single family, 80%. But what do you do if you want more than an 80% CLTV and you want to keep it simple? Your borrower says, Jose, I like you. I want to deal with you. I don't want to go all to here to get this loan and to there to get that loan. I want it all in one package, one time. I'm in a hurry. I need this done quick, and I know you can get it done. So we will do the combo HELOC for a refinance, where we structure the first loan as a rate and term. So mind you, look at these rates, pretty good. They don't really change much from the purchase. So we structure this as a rate and term at an 80%, well, 78.38 in our example. And then the balance, the quote unquote cash out component of the transaction, is the HELOC. So we rate and term the first, keep the rate lower than it would be on a cash out, and then give the customer a higher combined CLTV. So you don't have to refer them somewhere else for the HELOC. You can just do it all in house, give them a good deal, and have a happy customer. In 3 weeks to a month, they'll be closing and getting their money. But wait, there's more. We have another way that we can use these combo HELOCs, right? This is the one that we love in Florida, especially because we have issues in Florida with condos that do not have adequate reserves, tends to be the issue. Or they may have they may have too high of a percentage of renters. Two very common scenarios that could mess up your condo purchase and render it not doable under a Fannie Mae loan, conventional loan. So what we do then is we have our 90% CLTV, and for Florida is the example we're doing here, the maximum limited review first mortgage Fannie Mae loan for condo is 75%. The rest of the US is 90, Florida 75%, which is why we like to employ the HELOC combo, because then we do our first mortgage up to 75% loan to value. We do a HELOC for the other 15%, and we get a 90% CLTV at the rates that you see here. Very good rates. That's obviously the rate on the first. The rate on the HELOC should be the same, 11% on the purchase that we got down here. So that's your payment on the HELOC for this transaction for $138,750. And payment on the first. And obviously the frosting on the cake here is that you also don't have to pay MI. So you're coming in with only 10% down instead of 25% down, right? No mortgage insurance either. That's an added benefit to this whole transaction, because the whole purpose of this transaction is not to save on the MI, but to be able to come in with only 10% down. And they do cap it at 90% CLTV on the condo, but on the single family, we could go up to 95%. So many ways to skin a cat here. You see with our MI killer here, MI and jumbo killer, and limited review option. I mean, so many different ways that we can structure your loan. So really looking forward to helping our team structure these deals with their HELOCs, and help any investors that may be out there that may be in this predicament. They want to buy that nice condo, doesn't have reserves, you don't have 25% down. Just reach out to the mortgage calculator, and one of our MLOs will be more than happy to structure for you.
Thank you, sir. We absolutely love those. Those are the, as Jose said, remember that's the MI killer, it's the jumbo killer, and it's the condo limited review killer. So a lot of solutions is kind of like a Swiss Army knife there of a creative tool for a lot of situations. So please get with Jose or one of our team members if you might have a tricky spot where you need to get out of. So let me pass it over to Kyle, who can talk about how to get with our team members.
Absolutely. Thank you. So I just want to make note that you see here how Jose progressed through these. This is going to take a loan consultant, right? This is not something that every loan officer is going to be able to do, or even every lender. So just want to make a note that here at the Mortgage Calculator, our loan officers are loan consultants that are going to walk you through these different scenarios to figure out what's going to work best for you. Because as Jose said, there's many ways to skin a cat with not only this program, but all of the different non-QM programs that we offer. So if you are already working with one of our loan officers, maybe they shared this video with you, that's perfect. Get with them and they can send you some instant quotes. They can send you some quotes like Jose just showed, and they can do that for your specific exact scenarios very quickly. So if you are not working with one of our loan officers already, go ahead and visit us at themortgagecalculator.com, and we can put you with one of our loan officers to consult you through this process on any deals that you may have or may want to do in the future, and go out there and they can empower you with the different programs to be able to go find some new properties, some new investments that you may not known that you could do at the time until you got with one of our loan officers. So themortgagecalculator.com, go ahead and visit us there. We'll connect you with a loan officer, or you can email us at info@themortgagecalculator.com and we will get with you. This show we do every weekday at 11 a.m. Eastern time. So you can tune into this every day. And we also have some different shows that we do on our YouTube channel during the nighttime on Tuesdays and Wednesdays at 7 p.m. Eastern. So we hope to see all of you tomorrow, 11 a.m. Eastern time, so we can see how the rates fluctuate every day. And we will do another deep dive into a specific topic. So thanks for tuning in. We hope to see everybody tomorrow. Take care. Have a great day.
Thanks, everybody.